On behalf of our team at HBK, I'd like to welcome you to HHS Provider Relief Fund's reporting requirements with HBK Healthcare Solutions. Our session is scheduled for 60 minutes and is being recorded. Please note that all attendees are set up in listen-only mode. If you'd like to submit a question to our panel, please use the question box in the GoToWebinar control bar. A copy of the presentation materials are available for download in the handout section of the GoToWebinar control bar. At the end of the session, you'll be prompted to complete a survey and provide us with feedback on the presentation. If you'd like to receive CPE credit, you must stay in the session for the full hour and complete all the polling questions. For more information and insights, please visit our healthcare section of our insights page at hbkcpa.com/insights. At this time, I'd like to turn it over to Michael.
Thank you. Good afternoon, everybody, and welcome to the HBK Healthcare Solutions Group presentation on the Provider Relief Fund. Today, we're going to go through some of the reporting requirements, and we're also going to take you through the portal, the reporting portal a little bit, and show you a little bit about the navigation through it. On this slide is who's going to be presenting to you today. I am Mike Byra. I am a senior manager out of our Princeton, New Jersey office, and I primarily work on our tax side with clients in various industries, but with a focus on the healthcare industry and with a finer focus on physician practices.
I'm Danny Thomas. I'm in the Youngstown office as a senior manager. I also focus mainly in the Healthcare Solutions Group on the tax side. Been with the firm for about 4 years now and have about 10 plus years of public accounting experience. And I'm here with Kyle Crosshamel as well.
Hi, everybody. My name is Kyle Crosshamel. I work mainly in the audit side of our practice here at HBK Healthcare Solutions. In addition to healthcare clients, I have an industry specialty in not-for-profits, especially in the single audit sector of it. We're going to go through each one of us will go through different sections of the slides, and I'll pass it back off to Mike in Princeton. Thank you.
Thank you. So we have a polling question for everybody to start off with. What affiliation do you have with the HHS Provider Relief Fund? Are you a provider, a vendor, business associate, or are you other? And we had done a presentation on this probably about a year ago, but we wanted to get in front of everybody again because there has been some significant updated guidance on the reporting requirements. So we wanted to make sure that we got out in front of you to make sure you were aware. So to start off, give a little history here. What is the HHS Provider Relief Fund? It was a provision in the CARES Act that was carved out specifically for hospitals and healthcare providers that are on the front lines of the coronavirus response. In total, it's a $175 billion fund that was released over the course of the year in several tranches, with the stated goal of providing financial relief to providers who had unexpected expenditures and lost revenues from COVID. And the money is not a loan. It does not need to be repaid. It is a grant, but it is subject to the reporting requirements and terms and conditions that you are going to agree to when you receive the money. And on the next slide, we'll talk a little bit about those terms and conditions. So this is what you agreed to when you kept the money, essentially. So you agreed that you billed Medicare in 2019 and that you provided diagnoses, testing, and care for individuals with possible or actual cases of COVID-19. And we'll talk about what that means later. You're also agreeing that you're going to use the fund appropriately. You're going to maintain accurate records and cost documentation to fully cooperate in all potential audits. Any care that was provided to an out-of-network individual with a presumptive or actual case of COVID must be billed as if they were an in-network individual. And lastly, you're going to submit reports to the HHS certifying the use of the funds if you received total funds exceeding $10,000. On the next slide, we're going to talk about a little bit of the timeline here. So in April was when we saw the first and second round distribution of the phase one funds. This is when you opened your account one day and all of a sudden you saw some money come in from HHS. Then in May, there was a specific distribution for for those in the rural sector of the country. And there was also a distribution to those who were considered in a high impact area of the country that were really highly affected by COVID. Then in June, that was the deadline for phase 1 funds to be distributed. And there was a phase 2 distribution, general distribution, and also specifically to safety net hospitals. In July, there was a distribution to safety net acute care hospitals, certain specialty rural providers, and then there was a second distribution to highly impacted areas due to COVID. Next slide will continue. In August, there was a distribution to certain children's hospitals and also to nursing homes. In September, there was a general distribution from phase 2 for assisted living facilities. And then there was a high impact distribution as well. In October, there was the announcement of the phase 3 general distribution and also the first round of the nursing home incentive payments. Then December was the second round of nursing home incentive payments. And then the HHS began distributing over $24 billion in phase 3 funds. Now, on the next slide, we'll see why this is important, because depending on when you receive the funds, and that's what this column in red is, there's certain dates that you have to use the funds by, and then there's a time frame where you need to report on the use of those funds. Now, you only need to report if you've retained over $10,000 in aggregated provider relief payments during a single payment received period. Now, looking at the chart here, right now we are in period 1. So if you had received over $10,000 between April and June, you have a deadline until June 30th, this past June 30th, 2021, to use those funds appropriately. And now you have from July 1st until September 30th to report using the portal on the use of those funds. So you can see there's various time periods here for when you receive the funds, and the timeline that we just went through is a nice guide. So if you fell into one of those specific distributions, you could see where it lines up with the payment received period. Then you'll know when you need to use the funds by, and then when you have to start reporting on the use of those funds. And on the next slide, there's something that we want to make sure we keep in mind here, that the reporting entities must add all subsidiaries that meet the definition of eligible healthcare providers, even if there was no distribution payment to report on, and if the subs did not receive a PRF payment. Now, what's an eligible healthcare provider? They are public entities, Medicare or Medicaid enrolled suppliers and providers, and such for-profit entities and not-for-profit entities within the U.S. and territories that provide diagnoses, testing, or care for individuals with possible or actual cases of COVID. And again, we'll go through what that means. On the next slide, this is just a snapshot from the portal homepage. The website is up at the top there, so you can use that to navigate there, or you can just use Google. You need to register when you get there. So if you haven't already done so, you should go on the website and at least register through the portal so that you can start to begin the process of reporting. Some of the statistical information that they're going to want to know. So there's a lot of information that has to be reported here. You know, we talked about reporting the use of the funds, but there's also some financial as well as non-financial statistical information that they want reported. And the information that they want it broken down by quarter, and they want it starting in Q1 2019. So some of the financial statistical information they want is, did you receive any other assistance, such as PPP loans, EIDL loans, any other FEMA programs, any other CARES Act testing or testing funds, any state and local assistance, insurance reimbursements, and anything that can be considered any other assistance during, related to COVID. And the non-financial statistical information they want is related to your personnel. So what they want is a breakdown of the clinical and non-clinical full-time, part-time, contractors, furloughed, separated, and hired personnel. They want patient information, such as inpatient admissions, outpatient visits, emergency visits, and facility-specific visits. And then for those that are facilities, they want numbers on your medical and surgical beds, critical care beds, and any other types of beds that you may have. On these next two slides, these are just, I know it's a little hard to see, but it's a screenshot of an Excel file that you can, I believe you can export it from the portal itself, so you can use it to kind of do it before you do it in the actual website. So you can look at it yourself, you can review it with your accountant, but it kind of gives you a view of what they're really asking for here. And it's all the stuff that I went through on the previous slide. And I believe on the next slide, we have another polling question. Which piece of statistical information will be the most difficult for you to accumulate? Is it going to be personnel data, patient data, the other assistance received, or your facility metrics? And with that, I'm going to hand it over to Kyle, and he's going to pick you up from here.
Thank you, Mike. The next portion of our webinar is going to deal with the items that are going to be needed for the reporting, the non-statistical information, which Mike previously covered. When the reporting is done, it's going to be done in two phases. It will begin with the expense portion, and then it will move into lost revenue. Danny's going to go a little bit more into lost revenue on whether you have enough expenses and to cover your payments that you received. My focus here is going to be on the expense side of it. Now, as Mike has previously mentioned, if you've received less than $10,000 in the reporting, this is not going to be as applicable. You don't have to list out what the funds were used for, just that they were used. If you've received between $10,000 and less than $500,000, you're going to be looking at, on a quarterly basis, reporting in just two major categories, and those are the general and administrative expenses and the other healthcare related expenses. All of the underlying data within these two categories will need to be retained by you as the provider, in case there's ever a question as to what these were used for. If you've received $500,000 or more, there's going to be additional subcategories within the general and administrative and the other healthcare related expenses. This webinar is going to go through what those subcategories are and what you as a provider may see or may qualify as these expenses. Just a reminder that these are going to be on a quarterly basis for both 2020 and 2021. So this is going to information that has likely already been closed out for at least the 2020 year, and you can begin to have an idea what 2021's expenses are looking like, depending on what reporting period that you fall under. We can go to the next slide. The expense reporting is broken up into two different categories. It's going to begin first with the nursing home infection control. This was the distribution that Mike had mentioned earlier that went out to skilled nursing facilities. These provider relief payments that were received by the skilled nursing facilities can only be used to supplement expenses. So when Danny goes over lost revenue, I just want you to know that nursing home infection control money received cannot, if it's unused, if you've not used expenses on that money, you will be subject to returning that money to HHS. Now, we'll go through some of the expenses of that, and then we'll talk about the next ones. So, again, these nursing home infection control, we'll just call it infection control going forward. It needs to have an infection control expense. So, the largest ones are, these are the 4 bullet points which HHS has published. And the biggest ones talk about the reporting COVID test results to the applicable authorities. and administering them too. The hiring the patient care, and then other incurred to improve infection control. And we can move on to the next slide where we break out into the subcategories. The first is this general administrative, and just for ease of getting through just the definitions, what we've done is we've highlighted and underlined some of the larger categories or products that we believe providers are likely going to have most of their expenses within. The mortgage and rent needs to be specifically for infection control. So if you as a provider have fitted out your facility to specifically fight infection control, for instance, breaking a room into more than or building a wall in a room to specifically fight that, making like a cleaning room, that you could portion off some of your rent or mortgage. You would have to justify that and at least keep that documentation as to how you came across what that portion of it is. But it has to be related to the infection control. In addition to that, the personnel it seems to be one of the largest type of expenses. The administering the COVID-19 expense or testing and then reporting. If you as a provider have brought on additional administrative staff to just take care of this portion of your operations, or if somebody within your staffing needs or is committing a certain amount of time to this, that may be another justification as far as the personnel. But again, it has to be for that reporting or administering the COVID-19 tests. Staffing, including temporary employees, is also included in that. Administratively, this may be more of a justification where you'd want to work with somebody who's on site to figure out what that allocation is or who is specifically working in this, being as the infection control money cannot be used for revenue or against lost revenue. This has a little bit more of a black and white way to audit. So this is the beginning of the general and administrative. We can move to the next slide. For those said employees that have been identified in that previous slide, the fringe benefits may also be a part of this. It talks about hazard pay and travel reimbursement and health insurance. Now, HHS has made it a point that it can only be charged in proportion to the salary cost. So in that situation, if you say a quarter of somebody's time has been spent on infection control, you cannot take 100% of their health insurance. They should go in tandem with each other. But the fact that that has been included makes it seem like HHS is going to be taking a look at that. In addition, there's a few other utilities, lease payments. If it has a relation to do with infection control, which can be interpreted as a broad subject, that the advice of whether something is or is not infection control is outside of the scope of this. But we would hope that you would reach out to your healthcare business advisor on that, and we can go to the next slide now, where we go into the healthcare related expenses. There's a little bit of crossover here where we talk about supplies, PPE, hand sanitizers. A lot of this is also included in what the next section is going to be. So for the individuals out there that have skilled nursing facilities where they have both the infection control money and another type of distribution, being that this money cannot be used against the lost revenue, it may be a priority to use that money against this. And the other ones were updates to the HVAC or sanitizing equipment. It seems like it's become commonplace where if there's sanitizing equipment spread out throughout facilities or doctors' offices, even more prevalent than there previously was. So that can get those can get captured in this. And for all of you out there with a skilled nursing facility that expanded the IT to allow residents to reach out to their family. That would fall under this as well. I know that was with the state orders, at least here in Ohio. There were restrictions as far as who could actually come into a facility, and many of at least some of our facilities expanded that technology, portioned off rooms, and allowed families to connect, whether it be a Zoom call or Skype or what have you. So those are all of the main subcategories related to the infection control money. We can go to the next slide. We're going to go into the other PRF payments. So when we say other, this is everything except for the infection control, and in the infection control also gets the QIP money also gets included. But this is related to the other, the general distribution, the skilled nursing facility distributions, the ones that Mike had previously mentioned. And mortgage and rent was initially something that HHS had put out on their as allowable, and they've actually increased it and said, mortgage rent for the facility. Same with the insurance. They've added the caveat that it's relevant to operations. So, if there's any premiums for continuing your facility for patient care seems to be the kind of key word for your operations. An administrative building likely may not fit the definition that the HHS is looking for. But again, reach out, and if there's certain circumstances, you just want to be able to document it, and in case somebody comes in looking for an audit. Personnel, again, workforce training. A lot of these may kind of overlap with the previously mentioned infection control money. So if, in my example, 25% of somebody's time was used for administering tests, if the other 75% of their time is working with patients, this is where that would fall under. Again, we put the little caveat at the bottom. It cannot exceed the executive level 2 pay, which that gets adjusted for inflation each year. For those of you who had PPP loans, that cap was at $100,000. So HHS has made it explicit you cannot double dip on any of those funds, but you may have an instance where somebody is paid, for instance, $150,000, where $50,000 of their pay was not allowable to be reimbursed by PPP. That would qualify in this situation. So there is more or less a threshold between the PPP limit and the executive level.
I'm sure PPP along with the ERC as well. So if there are wages that were used for the ERC credit, the employee retention credit, those wages would not qualify either. So the biggest thing here is not to double dip. So if wages were taken for the retention credit and or the PPP for forgiveness, then those wages cannot be used for the forgiveness on this and for the provider relief payments. But like Kyle said, if there's anything left over, you can use those additional wages. So if somebody caps at 100 and it's up and above 100, you can still use those wages, even though they use a portion for the PPP or ERC.
Being the CPAs that we are, we love numbers, and we just love talking about this. The next piece is the fringe benefits. Again, a similar situation to the infection control. We're talking about hazard pay and employee health insurance. If there's any that relate, they should be in proportion to what that person's usage is when we're talking about their salary as well. Go to the next page. The healthcare related expenses, as I mentioned earlier, PPE, hand sanitizers, some of that vaccination administrative materials, that may have fallen under infection control as well. So it's going to be a matter of just using your priority and your judgment as to where that money spent on those is best accounted for. Equipment, refrigeration systems for the vaccines, if your facility or office had vaccines on site and needed to purchase some major equipment such as that, would be something to consider or factor in. And again, telehealth infrastructure, even some of our physicians' offices have turned to some of the telehealth. If there's any purchases for that, they can be applied. The provider relief payments can be applied for those. And then facilities, permanent, temporarily, or to just retrofit the facility in order to accommodate patient treatment. And again, if you've got a unique situation where you've done some type of retrofitting or have even started to do this, reach out to your business advisor and walk through the situation. There could be facts and circumstances where this money should be applied to that. Okay, we can go to the next slide. And then this is just a small screenshot of that Excel document which Mike mentioned. This can be found on the HHS website, and it'll give you kind of just like he said, you can fill it out before you need to really fill it out. At any point in time in the reporting portal, you can save and exit and pull this information out. What we've been advising is if you want to get to the 11th hour and then take a look at it and make sure everything looks good before you submit it, it may be a good idea, or at least already go through it and have it already pre-done before you go to submit. Again, Table A, that's for any of your providers that have 10,000 to 500,000, and then Table B is what it would look like for 500,000 or more. And just a reminder, this is you're reporting on the reporting period, the funds received during that reporting period. So currently we're in reporting period 1, so that's April 10th through June 30th of 2020. Any funds received outside of that, if you receive some in July or later, you would not be reporting those in this reporting section. So follow how much you've received in each reporting for that. What I included here was a few just FAQs from HHS. Kind of the highlight of this one was what's the definition of an individual. The very last sentence from the FAQ is that HHS broadly views every patient as a possible case of COVID. So if you've got an instance where you are still seeing patients, that is something to keep in mind, that every patient is a possible case of COVID and can meet that definition. What is included in the funds for salaries and employee compensation? They walk through an example of specific personnel that happen to go over the salary cap, and then if there was any reimbursement from other sources. The common one that we've been seeing is HHS or ERC, as Danny mentioned earlier. But it's just a walkthrough of how to materialize and back off some of these restrictions. Next slide. This was one of the newer ones that they had sent out. It talks about time spent by staff or director level, focusing some of their time, and it says that that cost may be allowable so long as it wasn't reimbursed by some other source. They all have to be tangible expenses and be able to support by documentation. Are the reimbursements related to securing and maintaining adequate personnel for reimbursable? And the answer is yes. There's been it seems like it's countrywide, but nurse employee retention and acquisition is very hard, and it seems to cost more and more as COVID-19 rages on. So if there was any hiring bonuses or retention payments or related type work to retain employees, those are allowable for the Provider Relief Fund. And I'll turn it over to Danny for lost revenues.
Thanks, Kyle. So the last part of the provider relief payments that can be looked at here are the lost revenues. Documentation for lost revenues. Having a detailed documentation describing the methodology for the calculations can be very important. The more documentation, the better here, especially for the alternate reasonable method. There are 3 methods of lost revenue, which I'll get into. There's the actual, there's the budgeted, or the alternate reasonable method. Okay. Documentation to be very important here because this can technically be the most subjective area because, especially when we get to the budget and the alternate reasonable method. Okay. Prior year and current year monthly income statement showing actual budgeted monthly revenues depending on the method selected. If it's budgeted, you'll need board approval of budgets or financials. And if utilizing the budget to quantify for lost revenue, detailed documentation surrounding each process for developing its budget. So even a typed up narrative will be required. So you're not going to have to submit documentation on a lot of the expenses as for like uploading receipts and other things like that, or under the actual revenue for the lost revenue here. But for the budgeted and the alternate reasonable method, you will need to attach documentation, which I'll get into in the next couple slides. Next slide, please. So what is patient care revenue versus lost revenue? Depending on the data that is entered on the previous expense worksheets, one of the following two slides are going to be displayed, either the patient care revenue or the lost revenue. If the provider relief payments received from the total monies, or if the expenses exceed the amount of money received, you will fall under the patient care revenue. Okay. If it's the other way, where your revenue is in excess, if the money received is in excess of the expenses, then you're going to have to do lost revenues. Okay. So depending on the amount of expenses reported on the previous worksheets will then determine the next tables that need filled out. The actual patient care revenue will only be shown if the payments were expensed, and reporting entities do not need to select a method for reporting lost revenues. As a reminder, as Kyle mentioned earlier, nursing home infection control payments may not be used to reimburse lost revenues. So if there's money left over from the infection control payments, we cannot use it towards lost revenues. That is not allowed. Okay. Just a little note down the bottom. If something's left blank on a table, make sure you add a 0. There's going to be some, little glitches on these portal cells and tables that might not let you continue. So anywhere where you don't fill something out, just add a 0. Okay. Next slide, please. This is a actual patient care revenue table. I know it's a little hard to see and small. We apologize for that. If, as I mentioned before, if the money received is used up with all the expenses, this table will show up. Do not leave this table blank. It is really just for statistical purposes only. What they want here is the actual revenue received in 2019 for the calendar year and versus 2020 for the calendar year. So just a basic example, if you got $1 million in HHS money and you had $1.2 million in expenses, you're going to use the actual patient care revenue worksheet here if the expenses exceeded the HHS monies received. Next slide, please. If we do not use the patient care revenue table and we need to use the lost revenues, we're going to select right here one of the 3 lost revenue options. You're going to use the 2019 actual revenue, the 2020 budgeted revenue, or the alternate reasonable methodology. Next slide, please. So for the actual revenue, it will be the difference between the actual patient care revenue during 2019 calendar quarters, using that as the baseline. You have to report 3 tables with actual quarterly revenue for 2019. 3 tables, from our understanding, is 3 quarters. Okay. I know this is small again. I apologize. The first 4 columns there, after the payer sources in the left column, are the 2019 actuals. The next 4 are the 2020 actuals, and then the final 2 columns are the 2021 actuals. Okay? Michelle, please jump to the next slide. So the actual revenue continue that you can use here, okay, are pretty much all your different payer sources. First one are your traditional Medicare Part A and B, okay, actual revenues and net charges received from Medicare A and B for patient care. So your hospital stays, your skilled nursing, your SNFs, any A or B payments net of uncollectible. So if there's any bad debts on the income statement and you're on, they should be netted with your revenue. Okay, so if you have $5 million in Medicare Part A and you have $50,000 in bad debt, net those 2 together to get $4 $4.95 million. Like Kyle said, we're accountants. We like numbers, so sorry for all my number examples, okay? So make sure you net those together. Medicare Part C, your Medicare Advantage, your extra services, your dental, vision, hearing, Medicaid, children's health insurance programs, commercial insurances. These are all going to be netted of any, bad debts again. Any of your co-pays, secondary insurances, anything like that. Self-pay, I think our skilled nursing facilities are probably going to see the biggest change here. Your private payers here, during COVID especially, you probably saw a drop in census. People weren't putting family members into nursing homes or SNFs at the time due to, the rules of, the 14-day shutdown if someone had COVID, it was very difficult, to admit a patient at that time and the family at the time, which, was holding off as long as they could put someone in. So, and if they had private funds that needed to be used up, that's probably where you're going to see a really big drop, okay? And then any other actual, payer sources that a resident or a patient would have as well. So you're really comparing your actual revenue here versus the 19 actual versus the 20 actual. It's a quarter by quarter change, so it's not an annual change. So if there's a quarter that did see a drop, that quarter will get pulled into the calculation. But if there was not a drop, it should default to a 0, or you should put 0 in that quarter. But we should show at least 3/4 of lost revenue, okay? The total lost revenues calculated by the system will not appear on the page. So this is not going to foot itself like a normal Excel worksheet. It's going to pull to the end on the financial summary sheet, which will be my last slide that I'll get into. It'll all pull to the end, and it'll get added on with the expenses that were used and allow for the lost revenue from the actual revenue count, okay? My bottom note here, just some housekeeping things. If you go back, make sure you hit save and exit. Don't just go back on your browser because you may lose some information. So anytime you have the opportunity to save and close, you have to get back, jump around, make sure you hit save and exit just so you don't lose any of your information. And as I mentioned earlier, put zeros in any of the columns or rows where you're not submitting information. Don't leave them blank. Next slide, please. So this is the budgeted revenue. This is number 2 of the 3. The difference between budgeted amounts and actual patient care revenues using 2019 calendar quarters is the baseline. The budget had to be in place and approved prior to March 27th, 2020. Okay? You will need to submit 4 quarters here on the tables. Okay? Reporting entities will submit both a budgeted and actual for revenues of net charges from patient care prior to netting with expenses, split by the payer mix, as I have listed below. These are the exact same payer mix sources as the previous slides. So your A and B, C, private pay, self-pay, other. So these are all the exact same, but they'll fall into your budgeted revenue here. Next slide, please. This is another example of the table for the budgeted revenue. Looks very similar to the actual, except the first 4 columns are going to be your budgeted for 2020, and then the next 4 are going to be your actual for 2020. Okay, so budgeted revenue here. Remember, you're only going to select one of the 3. So the budgeted, please jump to the next slide. The budgeted is really where documentation is going to be very important here. Must include a copy of the 2020 budget, which must have been approved prior to March 27, 2020. Okay, shows the format that they'll accept. Because you're going to have to attach down at the bottom and show you how to upload it. You're probably going to either be able to click on that, hit upload, or drag right into that. Okay. You're also going to need to include an attestation by the CEO, CFO, or anybody else in a responsible position representing the reporting entity for the accuracy of the budget. The attestation must be submitted in a PDF file format. Okay. And it must state that the budget was established prior to March 27, 2020. Be submitted on organizational letterhead and include a signature and complete contact information. So you're going to need to include 2 separate things here, the actual budget and then the attestation that I just went over. Next slide, please. The third method and the final method is your alternate reasonable methodology. This one's going to be a little bit more difficult. I don't want to sit here and tell anybody not to use this one. I think it's just going to be a little bit more complicated. Okay, so we don't recommend it unless you absolutely have to use it. Okay, if the methodology selected is not reasonable, okay, the HRSA, Health and Resources and Services admin, is going to send it back, and you're going to have to start over. Now, if you do this on September 30th and you try to submit it that day and they kick it back, is it going to be late? That is a possibility. So if you are going to use this method, we would recommend that you start it sooner than later. Documentation is going to be very important here, okay? You're going to need a typed up narrative. You're going to need a lot more information than you would need for the budget, okay? The budgeted method. Next table, please. Next slide, please. The reporting entity is required to complete one table with calculated quarterly lost revenues using the alternate reasonable method for the calendar years 2020 through the end of the period of availability, okay? Some of the documentation that we'll need supplied is a narrative document, and it must describe the methodology and an explanation of why it is reasonable, okay? Also, a calculation of lost revenues will need attached, okay, and any additional supporting documentation. These will all need to be submitted in the formats listed below. So if this method is chose, all three things below, the narrative, the calculation, and any additional supporting documentation, that one is optional. We'll need submitted here, okay? Again, this could be the most complicated one, but if it needs to be used, if you have questions in a method, anything we can assist with, we'd be happy to help you here. This one's a little bit different. They just want lost revenue between the 4 quarters. So not as much reporting, but you will need to put information in here for all 4 quarters of 2020 versus 2021. Obviously, we're not through the final 2 quarters of 2021, so those would probably be blank. So the focus here would be the first and the second quarter. Next slide, please. Final slide I have is the PRF financial summary, okay? This is the page that I mentioned would display. So depending on what is selected, either the patient care revenue, the lost revenue, this page will look different. So all those tables that we filled out prior are going to flow into this page here, okay? And as I just mentioned, if you take the actual patient care revenue, this slide is going to look different than the lost revenues. And remember, patient care revenue versus lost revenues, if our expenses exceed our provider relief payments, we're not even going to have to go into the lost revenues. But where we may see lost revenues come into play here is if you used PPP funds and ERC credits and, you're short on things and you need to get in the lost revenues, that's really, where the focus is going to be at. But if the more expenses you have, I think the better. I think the lost revenue could be a little bit harder in instances to explain, but if you use an actual numbers, it's going to be pretty cut and dry, just showing income statement numbers. But if it is budgeted, we just got to make sure that those budgets were put into place prior to that March 27th due date. And if you use the alternate reasonable method, just to make sure we really have something typed up, pretty detailed and documented of why the method would be acceptable. That's all I have. I'm going to kick it back over to Kyle to wrap up. Oh, we have a polling question here. Which revenue method requires the most information to be submitted? Actual, budgeted, or alternate? Good luck. Kyle?
Hey, if I can interject here for a minute, just a thought that I had. I was looking at this morning with some team members talking about a client. We've been talking a little bit about the interplay with PPP and ERC and the no double dipping and everything. And, it would seem to me, and guys tell me if I'm off base here, but it would seem like the preference would be to focus on the expense side, at least, to focus on PPP and ERC, and then use for the PRF for a few reasons that I think. PPP, you have a shorter time frame for expenses to choose from, and you want to get that thing forgiven. You don't want to be paying that back. ERC, it's a nice credit to get. Provider Relief Fund, you basically have a year in most cases, and depending on when you got the funds, sometimes more than a year to use the funds. So you have a longer time frame to choose from. So it would seem that you would want to allocate what you can to PPP and ERC first, then maybe move to PRF. And that'd be something that you could do with your trusted advisor or yourself, depending on who you're going to be communicating with on filing these things. I don't know. Do you guys agree, or am I just talking nonsense?
Right, and that's been our approach with limited exceptions. Is that obviously you want to put your priorities in order as far as maximizing the funds without having to pay them back. That seems to be the name of the game here. To carry this forward, we're going to go into the accounting for the funds. For the tax treatment, the PRF payments were taxable in the year received. Expenditures were also allowed for. So just keep that in mind if you haven't completed your 2020 tax return yet, or if you've received money in 2021, that's something to keep in mind. As far as a U.S. GAAP, if you do a financial statement audit that is on GAAP, it's generally a deferred revenue or a refundable grant liability until that lost revenue or expense is incurred. As you're doing the reporting here, this will help substantiate moving that from a deferred revenue into the income statement. So we've generally seen this as other grant revenue or an other revenue type source, not within operations, since the nature of this is one time in nature. And there's some guidance as far as not-for-profits. It's a conditional grant. If there's any not-for-profit entities on the call here today, it's conditional because of the terms and conditions. We can go to the next slide. So one audits, two audits, single audits. Some of our not-for-profits may be a little bit more familiar with this. Any entity that receives governmental funds and turns and expends them or uses them for lost revenue in excess of $750,000 is subject to a single audit under the uniform guidance. This is generally in the not-for-profit space, they're the ones receiving money. But with the guidance currently as it stands, for-profit entities will be subject to this. Now, this was something that was sitting out there for a little while. We knew that 2020 there was the possibility of an audit to be done. Unfortunately, they didn't explicitly define what needed to be tested, and there was uncertainty as far as how you could test the reporting part of this since the portal had just opened. So you can go to the next slide. We'll go a little bit into what, just to keep in mind expenditures. They're based on CFDA number. So the Provider Relief Fund had its own CFDA number. So these all kind of get put into one, and it's expended. And by expended, the lost revenue is also something that goes into that calculation as of right now. So if you're reporting the use of that fund, that's synonymous with using it as expending. Go to the next slide. This is a chart that Mike had put out earlier, and we tried to make it a little bit more readable. For any entity that received money that has a fiscal year between June 30th, so just a few weeks ago, through the end of the year, but not the last day of the year, so not a calendar year, the schedule of expenditure and federal awards, the CFA, that's how these report. This is how this gets reported. If you've got a fiscal year and you've expended more than $750, you're going to have an audit requirement for your fiscal year ended. And if you have a calendar year or a fiscal year through June 29th of 2022, then you're going to have to worry about reporting period 1 and period 2 all in one, and then anything later is listed out there. The big portion of this is that for not-for-profit entities or even for-profit entities that had audits for their 2020 financial statements, they, as auditors, we could not test the reporting side of this, so we need to make sure that items are not only allowed and allowable, but that it was reported properly and in the correct time frame. And as you can tell by this chart, you could have received money in December of 2020, but you could technically not need to report until March 31st of 2022. So HHS realized this, and they weren't going to let these audits hang out almost, we would be looking at 15 months beyond year end before those audits could be issued. So what they've done is released the guidance and said, we're going to report any of that 2020 payments received when we do our 2021 audits, which is a little bit more in line with how a financial statement audit typically is performed, usually shortly after year end. In this case, that won't technically be allowed until just after March if you receive money in period 2. If you are uncertain whether you would fall under this single audit requirement, feel free to reach out to your business advisor. We can work with you, gather an understanding as far as whether that requirement is going to be necessary. And to keep in mind, for-profit entities as it stands right now are still going to be subject to the single audit. The AICPA has pushed the subject on whether this is still going to be applicable, but as of right now, that's what it is. And until we hear otherwise, that's what the plan should be, is that there is going to be some type of audit requirement for even your for-profit entities. So we can move to the next slide. This is just a slide that goes over what, as auditors, we are going to need to end up looking at. Like I said, activities allowable and allowed, reporting, and then as we're eagerly awaiting the compliance supplement for 2021, there's going to be a list of items within the PRF reporting portal, which the auditors are going to need to focus some of their time on, which may fall outside of the scope of the compliance requirements at the top. We're waiting for that to be issued. It generally gets issued late in summer or early in fall, depending on the year. Go to the next slide. And polling question number 4, any CPAs or licensed professionals out there, do you need CPE certificate? Be sure to mark this yes if you do. That's what the polling questions have been gathering the information for. Our team here will coordinate getting that CPE certificate to you if you qualified by getting all the polling questions. And then the last slide, we just want to thank everybody for spending their afternoon with us. HHS has really, it seems like, changed course from time to time. And if you remember that first slide, it's been a real roller coaster ever since they started sending this money out from the general distribution all the way up until just a few weeks ago. We continue to monitor the FAQs, and we encourage all of our other all attendees to monitor the FAQs and HHS's guidance on the subject.
We did get a couple questions that were submitted. Is statistical information reported if you received less than $500,000?
What was that? The statistical?
Yes, information reported.
Yes, the statistical information will be needed if you've gotten less than $500,000. $500,000 threshold relates to the expense detail that you would need to report on, whether it's the subcategories or just the general and administrative and healthcare.
The next question is, if you have not received funds, do you still have to submit a report when it is due?
If they didn't receive funds?
Correct.
My interpretation on that question is, if you've not received funds in period 1 and period 2, is there any reporting requirement? And as it stands, I don't believe there is. You would have to report in the reporting period in which you received your funds. And HHS has been very explicit that you cannot report early, and they will not grant extensions.
Yeah, so there's going to be some waiting. So as much as people would probably like to get everything done and submitted now, you're going to have to wait until the reporting period opens, depending on what quarter or 6 months you receive the money in.
And there was one last question that was submitted. If infection control expenses exceed payments, does excess carry forward to the PRF expenses, or should we just report infection control expenses equal to payment?
There has been questions out there that have been raised about that, whether it will carry from one to another or even from one period to another. And that's unclear at this point. HHS has not issued any authoritative guidance on whether, if there's excess in period one, if it will carry to period two. So we're going to monitor that and continue to watch the FAQs or the information on that subject.
Okay, I would like to thank everyone for attending this webinar, and a copy of presentation materials will be emailed out to all attendees. Thank you and have a great day.